Tonight I've invited investment expert and Sky Business regular Roger Montgomery back to the program to talk strategy. And I'm going to ask him which 10 stocks he thinks represents the best value on the ASX right now. How are you, mate?
I'm well. Good to see you again.
I asked you to go for your top 10 stocks.
Sure.
You always rank stocks A, B, C.
A, B, C, and 1 to 5, based on their performance and the probability of them going under. So I would be very, very, very shocked to find any of these businesses that I list today making some sort of announcement about a massive capital raising or an inability to pay off any debt obligations that they have, or a liquidation or bankruptcy. I just don't think these businesses are going to produce that kind of result.
Okay.
So they're, if you like, safe. But that doesn't mean that their share price can't go down. There's a very big difference between what I'm about to tell you in terms of their values and predicting the share price. So what I do is I think, as you know, very long term, I think these are great businesses. I think if you buy them at a discount to intrinsic value, you're in a better position to do better than the market. I don't think that I'm any good at telling you whether the share price is going to go up or down next week. Let's go through. The first company is an A1 business called Matrix Engineering. Now, Matrix Engineering is a business. It's involved in manufacturing buoyancy devices, principally at this stage. Buoyancy devices for deep sea oil rigs, deep sea oil mining and oil drilling, rather, and it is one of 4 companies in the world that does it, and they do it very well. They've been around. They've only been listed. They've been listed for less than a year, but they've been in business since 1982. One of their competitors, fantastic. One of their competitors has been. It looks like going out of business. These guys have a superior product. They're consolidating all of their manufacturing plants into one at Henderson in WA. That's going to cost them, let's say, $60 million, and despite the costs associated with constructing that facility, they still only lost, and I say lost, cash flow. Their cash flow was negative to the tune of $15 million in the last financial year. Now that's amazing considering how much they're spending to develop this particular facility. To give you some numbers, trading around $4, $3.98. My value, actually, this is going to surprise you because I never give you valuations like this. Value's about $6. And their intrinsic...
Matrix will have a good day tomorrow, I think, after this.
Well, just, hey, listen, you know, if you go out and buy it, the share price could halve.
That's right.
And you know, you need to go out and do your research, go and get personal professional advice. By the way, let me confess, I own shares in this business. So
well,
if
I would too, given the fact that they're at 4 and you think they're worth 6, you'd be an idiot if you didn't follow your own advice on that. Well, we know you're not.
Well, thank you very much. So Woolies is the next one. We've talked about Woolies at length. You know, you've picked on me on air when I haven't been on the program, and you've said that Wesfarmers, it was about Wesfarmers. Look, Roger doesn't like Wesfarmers, he likes Woolies, but look at Wesfarmers, it's gone up today. Because the next day when it goes down, you don't say Roger was right.
Rubbish. Rubbish.
So anyway.
And Woolies had a lovely day today.
Yeah, they did. They had a good day today.
And I was going to say, you got that one right, I was going to say it, but you jumped in ahead of me.
Well, it's only one day, mate. So, look, 27% return on equity. The current value is about $26.18, which is where it was a little while ago. Okay, so today's been a bit of a strong day. Its intrinsic value should rise about 8% a year for the next 2 years. The next one, there's a caveat on it. It's an A2. It's not an A1, but it's a cab charge.
Yeah, it's a tricky one, isn't it?
There is a caveat on it.
Issues there.
Well, ACCC's really out for blood there, so you need to be careful. But it ticks the boxes for the moment.
So it's currently
trading at about 425. Well, there actually is up a bit more than that today, I think.
And you got 682 or something.
682 is the valuation. Return on equity of 21%. Intrinsic value rising about 8%, assuming the status quo is maintained. Okay, so that's the caveat.
Exactly right.
The next one, JB Hi-Fi, trading at $19.90 or thereabouts. 40% return on equity. My valuation now about $24.74. And intrinsic value rising about 11% a year. Change of management. Everyone's worried. I remember when Roger Corbett joined Woolies. Everyone was worried about that too. Turned out really well. Don't know if it's going to happen here. You know, can't predict the share price, but it ticks the box. Oriton, we've had Sally McDonald on the show.
Old school friend of yours.
Trading now at $7, and 80% return on equity. My value is closer to 10 than it is to 7, and its intrinsic value is rising about 11% a year again. ARB, $6.44, 29% return on equity.
Explain ARB to people, because a lot of people might not know ARB.
Believe it or not, unusual, bloke's business.
Blokes.
Tends to be a bloke's business.
Yeah, right.
Bull bars, running
That's
boards
right.
for four-wheel drives.
It's a car business.
Yeah, correct.
Yeah, yeah.
And global aspirations. In fact, doing some manufacturing offshore, it's going very well.
I've met the owners in the past.
30% return on equity.
Yeah.
Valuation rising by about 10% a year for the next couple of years, and the value is about $1 higher than where it's trading at the moment.
Yep.
Data3 is the next one, trading at $8.80, 43% return on equity. My valuation is closer to $10, and the intrinsic value is rising about 5%. Computer share, $9.15, value about $10.36. 25% return on equity. You've got to be optimistic about the share market for this one because its returns really are. You really want there to be lots of corporate activity, lots of share issues, and all that sort of stuff.
Hasn't it, Roger? There's more rivals in that space.
Sure, but these guys, I mean, they're still generating very high rates of return on equity, which are expected to be fairly stable at that 25% level for the next few years.
Yeah.
Now, Platinum Asset Management. I mean, if there's a business that you'd love to own at to get for free, this would be it. I mean, this is
Kerr Nelson's outfit.
This is Kerr Nelson's business. Well, it's a public listed company. He's still got the biggest stake.
Yeah. Well, we say Rupert Murdoch owns news, but we know he doesn't.
Yeah, 70% return on equity. Yeah. Trading now, again, another business like Computer Share where you have to be reasonably optimistic about the share market. Yeah. But this is a business that the funds management business is a great business because you get a fee managing money irrespective of the return that you generate on that money, provided you don't produce lousy results. Sure. DWS and Data3, both internet service companies, IT type businesses. Yeah. Again, great thing about these businesses, much like the funds management businesses, you don't need a lot of people. You need people, but you don't need a lot of hardware. Yeah. You don't need a lot of plant and machinery. Okay. ITX is another one that has been in ITX is another one in that space.
Remember, there are people at home writing this down.
Yeah, they've received a takeover offer now, and so really it's been recommended by the board, and so that one's passed.
The price is pumped as well.
Yeah, but a few weeks ago, that was one that I was talking about quite a bit. Yeah. So there's 3 IT businesses out. Here's the curious thing. Sometimes you get an aggregation or a congregation of businesses in the same space that are a bit on the nose perhaps, or they've produced very good results and people have ignored those results because they're looking at the past. Share price has done very well. I don't think they can keep going as well in the future. Yeah. So mining services, there seems to be some businesses in that space that look cheap. I haven't mentioned them all. I've just mentioned Matrix.
Monadelphous often gets mentioned.
Well, I think Decmil is a future Monadelphous. Yeah. I spoke to their CFO this morning on the phone about their results. Forge is another one.
That company again you just said?
Decmil, D-E-C-M-I-L. Right. Go and have a look at it. I'm not suggesting you go out and buy it. Go and have a look at it.
But the values look good for you.
Yeah, well, look, it's trading at about its value now. It's run up towards its value, but I think that value is going to keep going up in the future. Some people, just on that business, some people were very worried about the substantial drop in receivables, and there was a bit of a jump in payables, so it looked like there was some funny business going on there. Yeah. But really all that happened, and I spoke to the CFO about this, all that actually happened was June last year was their strongest billing month, and May this year was the strongest, not June. So you're comparing a slightly weaker billing month to a really strong one last year, so that's why there was that decline. So that's my list.
Top 10, we're playing back to the guests. Viewers, can we show them, please? So it's Matrix, Woolworths, Cab Charge with a question mark, JB Hi-Fi, Origin. You didn't mention that one.
I didn't mention Origin.
You didn't.
And what the girls are doing out the back there, didn't mention Origin.
Kill Origin, ladies and gentlemen.
No Origin.
Yeah, DWS. Data3. So who was the one?
What did they leave off? Origin, not Origin. Origin.
Yeah, you wouldn't think we have female producers here, would you? Going for Origin, it's a real blokesy company, and Mr. Female company.
Does not run Origin. Let's clear that up. She runs Origin.
Well, Roger, that was fantastic work, mate.
Pleasure.
And I know you're going to help a lot of people who have never understood what you're talking about.
If the share prices of these things go down tomorrow, don't pick on me because I don't know where the share prices are going.
I will always pick on you because without that kind of objective criticism, you can't improve. Thanks for joining us.
Good on you. Thank you very much, mate.